Welcome back. You're watching us here on Chartbusters. The stock that is literally busting the charts right now is Ixigo, Revenues Tech, as the company has reported its first quarter numbers. Very strong numbers that have come in. 73% growth in the revenue, adjusted EBITDA growing 54%, reported EBITDA 53%, and the net profit higher by almost 30% as well. The stock up 14%. We have Aloke Bajpai joining us here in the studio virtually. So we have Aloke on the big screen here. Aloke, thank you so much for joining in. It's a big move that we've seen on the stock. Before this quarter, the street was working with a number of 1,000 crores in terms of revenue for FY26 and roughly 70 crores in profitability. Come first quarter, you've done 300 crores already. So should the street believe that you can go ahead and do 1,200 crores this year in terms of revenue? And what sort of margin and profitability target would you have?
Hi, thank you for having me on the show. I think, what you're seeing right now is essentially a result of several years of working for, the use cases that Bharat or the middle-class travelers in India actually crave for. I mean, rather than focusing on the first 50 million users, Ixigo chose to focus on the next billion users and build deeply thought use cases around trains, buses, and now flights for the first time flyers. You're seeing the flights momentum starting to come in. Some part of that is coming obviously because we have a very large user base. We are the largest OTA by user base, and some of that has started to show up in our flight growth. Buses, in our country is the only supply unconstrained channel because, if you look at flight growth, it's also constrained by how supply addition works, and trains also is supply constrained. But buses in our country have grown quite rapidly with the construction of highways. And so we've benefited in these two categories, flights and buses, to grow way faster than even our own expectations. Both have actually grown in the 70s. In the passenger segments, GTV has grown at 81% for both flights and buses year on year. And we are able to monitor.
Alok, that exactly is the first question. Flights and buses have grown ahead of your expectations. It's grown ahead of street's expectations as well. So in light of that, how sustainable is this growth? And for the entire year, what are you now revising your targets to?
Well, we're not giving any forward guidance at this point, but all I can say is that at an overall level, right, what we had said earlier, which is that we were gunning for 40% plus GTV growth for the full year. And it seems like, we started off on a better than that note with 55% plus growth there. I think we'll stick to that because, last 1 month has also seen some, on the air side, some sort of turbulence in the sense of, first there was Sindoor in May, and then in June you had the AI 171 as well as, 15% of international capacity of Air India actually being taken out and then brought back in recently. So there's been a little bit of flux there in the business, but since we are growing from a very low base, you have to understand that we are obviously starting off from not being an OTA 5 years ago to being the third largest OTA on flights. And trains, we've always been obviously growing quite nicely, being the largest OTA and still continue to grow faster than the market. I think the surprise for us came more on the buses side where, in terms of not just volume growth, but also on the value growth and take rate, we've managed to improve our takes there. Even on the flight side, we managed to sell more value-added services. So I think all that is contributing. Going forward, I would say that we should have a 2-3 year run where we could continue to sustain 40% plus GTV growth, given we are coming off low market shares and going into meaningful market shares in both flights and buses.
All right. Hi, Alok. Good morning. Good to see you in. This is Nigel on this side. I recall the conversation we had during the IPO. And you all were sounding very, very optimistic. And now the street is quite happy because after the initial flourish, the stock did see a correction. But today it's up close to 15%. So good on you. Now you've given us a brief understanding about growth. But how does growth compare with the rest of your peers? What was your market share in each of the verticals? And how much has it increased? Please go ahead.
Yeah, so on the train side, we managed to grow our market share within the OTA rail space. We were at 58% 2 quarters ago. We have crossed 60% in the June quarter there. On the flight side also, we have touched kind of double-digit growth, double-digit market share on the online travel agent market share piece. And When you talk about buses, I think we would be in mid to late teens right now. I think we are awaiting numbers from competition, obviously, to come in and corroborate some of this. But this is our initial assessment based on what we are seeing on the supply side.
All right. Buses is late teens. Train market share is 60%. Flight market share is double digit of the entire OTA space or the entire booking space.
OTA space.
All right, we take that point. And what about hotels? That's a very small proportion of your overall business. You started that just about a few quarters ago, if I'm not mistaken. That, the others vertical, is about 5 crores in terms of revenue, comes off a very, very low base. How big do you see this business to be now that all other engines of yours are firing?
So others has both our hotels business and our food delivery on trains business, both are in there. So and perhaps other small businesses as well. So essentially, I think we are quite satisfied with what we are seeing internally on the hotel numbers, although we are not giving out any numbers here. But month on month, we are seeing strong growth in terms of hotel room nights being booked. And I think we are satisfied there. Of course, the product and the content will require, perhaps a few more quarters of, investment of time and effort to take them to a level where we can start talking more about hotels.
No, the reason why I ask you is because, the street wants to know by when will you start talking about hotels? Is there a particular milestone that you're waiting for? And what is your aspiration here? Because the larger market is the hotels market. Yes, travel does well, flights is a high value market, but the kind of cyclical upmove that the hotel industry is on, that opens a big opportunity for you, especially in the next billion users that you are targeting. So what's your aspiration here in terms of overall revenue contribution, performance, and some milestones?
See, if you look at the macro, right, there's 2 to 2.5 million rooms sold every day in India, out of which, only about 25-30% would be sold online today. And if you look at the budget side, that penetration number is even lower, probably 10 to 15% when you talk about budget hotel online penetration. So I think the opportunity is very, very large, and I don't think we are benchmarking ourselves against any incumbent or any numbers at this point. I think the short-term vision for us is to get the product experience right, make Ixigo a place where people want to come and book hotels. If you look at our journeys on trains, flights, we were not the first entrant in any category we got into. We took several years to get the product experience and customer experience to a level where there was strong word of mouth and strong organic coming in, and only then we pushed the pedal on growth and started talking about our numbers. And I think the strategy will be very similar on hotels. So I would say it's going to be not something in the short term that you will suddenly see us talk more about, but in the mid to long term, definitely hotels will define who we are.
Okay, all right. Very quickly, Alok, before we let you go, I wanted 2 numbers from you. One is ad revenues as a percentage of business, I think, which is mid-single digits right now. How do you see that number pan out? Point number 1. Point number 2 is, for companies like yours, there would be an ESOP cost as well. What is that likely to average on a yearly basis?
Yeah, so the first one, ad revenues, definitely there is more potential than what you see out there today, because we have very limited inventories that we are actually monetizing. And one area where we are seeing emerging opportunities, obviously, on the bus side, where there's a lot of endemic advertising coming from bus operators started to show up, and I think we'll see more and more of that going forward. And as our hotels business matures, I think there will be advertising opportunities to tap into there as well. So yes, there is more potential there in the years to come. Can you remind me the second question again? Sorry.
Yeah, ESOP cost. ESOP cost.
Yes, so ESOP cost, I think, there are largely 3 types of ESOPs that we have. One which are time-linked, one which are milestone or market cap linked, and the third which is M&A linked, where we've given it to founders or management teams of companies we've acquired. So I think at this point of time, what you see, there could be a slight increase from there, but in a 30-35 crore zip code, at an annual level is where we expect it to lie.
All right, 30-35 crores at an annual level would be the ESOP cost.
For the forward 12 months period, that's where it should lie.
You've given us a guidance on 40% GTV growth that continues over the next 2 to 3 years. Just finally, Any margin band that you'll
Guidance,
talk
I will
about?
say that's what we are expecting.
That's
an
your aspiration. Let's use that word, aspiration. What about margins? What's your aspiration when it comes to margins? Because it's reported margins are around 8% right now on the EBITDA level.
Yeah, so the way we look at or think about margins is that, see, in categories like flights and buses where there is opportunity to grow faster, or in hotels where we are investing to create the market, right? I think we are not so much obsessed about where the margins are at, but more about growth. And whereas, in mature categories like trains, obviously the margins are showing up and still growing. So I expect that, margins should improve over time, but, I'm not really holding myself accountable for that, because at the stage where we are at, I think growth is more important
Got it.
than growing margins. Yeah.
It's clear strategy. Thank you so much, Alok, for joining in and giving us your outlook for the year and all that you've done, which has led you to perform the way you have in the first quarter itself.